I'm Geoffrey Injeni, currently a full-time faculty at the Strathmore Business School in the area of accounting and finance. If I can mention briefly the most likely causes of high interest rate in Kenya is specifically just to finance the government expenditures, the recurrent expenditure, which is quite high. And if the government is not getting sufficient monies from revenues, then they just have no recourse but to borrow, and to borrow at a higher rate for that reason. No, actually, the truth is that by last week, the World Bank had already reduced the growth rate projection. Now this has come down to 5%, and they're just looking at the same basis. Because when you have a cash crunch, you tend to spend more on recurrent expenditure. Recurrent expenditure, although is good to stabilize the economy, is not really a major source of development or growth. So if we are able to turn around things and manage our cash flow well, we can come back actually to a sustainable path. So as we speak right now, we can say, okay, we can cut down our projected growth, but when circumstances change, say by next year, January, February, maybe the growth will also be optimistic. So some of these things happen depending on the economic conditions that are, available. Yeah. And of course, don't forget that economic projection is not sometimes a one-time event. You can have an overall growth rate, but it doesn't mean that now that the situation is bad, that we may not experience economic growth. Something can happen and we can recover and even exceed the current projection. But as things stand right now, the symptoms are we need to do something to be able to go back to the 7% and others. When the Monetary Policy Committee of Central Bank normally meets to discuss the rate, the minimum rate that the central bank applies for borrowing, there is also the banking, the interbanking rate, the rate at which banks can borrow and lend with each other. But generally, central bank, when it looks at interest rates and sets the interest rates levels, they consider so many factors, like I've said. And also the success of that rate also depends on other factors that sometimes they are beyond central bank. So currently, what central bank needs to do is to work well with Treasury and maybe KRA on fiscal matters, just to ensure that we are balancing out a number of factors. So for example, if KRA is able to collect its revenues well and on time, then that will reduce the pressure of the government having to borrow from wananchi, and therefore that can bring down the interest rate. Secondly, if say the government is able to look at cheaper sources of finance, say like IMF and others and other donors, that can also help to reduce the rate of borrowing around. And then the government itself to look at how it can cut down its expenditures to reduce pressures to borrow. That can help to reduce the interest rates also. And then of course, what then the government needs to do is to relook into some major projects. Okay, some of the projects are important, but based on the challenges we are facing now, we can look at maybe deferring some of those projects to reduce the impact of having to borrow. to finance these projects.